Hey YouTube, this is Zach with Achilles Financial. What I have on the screen is the Thinkorswim web version platform, and I am showcasing SPY, the S&P 500 Trust or ETF. And you can see that we had a massive down day today, representing a $17 decline in the indices, or just north of 4%. It's one of the largest down days that I've seen in terms of when we've been actively tracking. Now, the indices actually did manage to recover just a little bit there at the end of the day. However, still overall a very painful experience, dropping as low as 391. A lot of this information, or a lot of this decline, was that we had the CPI print this morning come out, and it was higher than expectations, although slowly decreasing. But this does overall represent that inflation is still very much an issue, and there's a lot of economic narratives associated with it. I do want to put into context, when we look at a 3-month chart, we still have not taken out the lows that were set back in June of this calendar year. And I would also call out some of the stalwart stocks, such as an Apple, have still not gotten remotely close to those lows that were again set back in June. So what I would call out there is, depending on what narrative you're looking to follow, I still think that there is more potential downside. However, puts are very, very expensive, so you can view some additional options such as a SQQQ or a SARK type of fund, where you're short the QQQ or the tech heavy indices, or you're short ARK Innovation Fund. Something interesting to call out here is there's been a few kind of poor performers during this time period, with Nvidia being one due to a number of macroeconomic indicators. This is one where within the past 3 months, you can see I've got this 3-month chart here, the stock hit a new 52-week low today of 100, and we'll say we're around $131 a share. However, less than a month ago, or just over a month ago on August 4th, the stock was north of $192 a share. So this is some massive swings in a stock that is not a small percentage of QQQ, and it is not a small percentage of the overall S&P 500. And we're seeing some massive swings compared to a company which is a stalwart like Apple, but we have some of these larger tech stocks that are getting beat up on. The one that's noticeable, kind of staying steady, and something that I would classify as a short target for myself, however, it's very expensive to buy puts on personally, is Tesla. So you can see that the stock is currently at $291 a share, well north of the low that it set back in June at $208.69. So there's a number of factors that I'm going to be watching as it relates to Tesla, recognizing that there is overall still a very high percentage of retail investors that are still buying into this, as well as recognizing that there are a number of larger factors. At the end of the day, from a valuation perspective, I continue to believe that it's overall not worth this much, and recognizing that the company still trades at a market capitalization north of $900 million on its current expected growth targets. I think that this opens up a very interesting short opportunity where we can see it lose another 20% in value. And based off of some of the trends we've seen, I think tech is going to continue to be in pain. Now, in alignment with that is a channel favorite and one of my favorites, looking at STEM. You can see that they're up still more than 100% from where we were a month ago, and nearly up 200% or closer to 150% from the lows back in June. So at this point in time, I'm not actively purchasing additional STEM shares, despite the fact I think the growth story is still on for the company. I think you're going to continue to see some negative pressure as it relates to their overall profitability goals and just the broader market expectations. The company's doing everything I expect them to do, but if the overall tide is going out or the market is going down, even if you have a solid ship, it's still going to slowly decline with those expectations. That being said, you can see that they have developed somewhat of a floor at this $14 mark, and the company, or the stock itself, continues to perform well, even compared to a number of these other stocks that you see on the market today. So all that being said, I think that we still have some opportunity to the short side, and I'm not quite accumulating shares at this point. I think this is a trend that we could see continue, despite the fact that we may continue to expect to see some positive variances, especially associated with the declining dollar value, as well as increasing chances of a potential military or decreasing potential of additional military conflict in Eastern Europe. So some of the things that we're going to watch on a go forward basis is what do the expectations for a Fed hike look like? I continue to think that we could see 100 basis points, but I have my money on 75 basis points. Things may change till that point in time, but I think as long as we continue to see a tight labor market, we're going to continue to see pressure for higher interest rates. So all that being said, overall, I'm staying very cash heavy. I expect to continue to do so. I think we're going to see opportunity in the future, but I don't see a lot of opportunity now. That being said, if you've got some stocks that you're watching, please let me know in the comment section down below what you think is a good opportunity, and I look forward to walking through those at my leisure and may make some videos on them. If you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.